The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates, with consumers across 35% of all mortgage transactions nationwide. Remember, they tell us the actual locked rate, the rate that goes into the mortgage calculator to tell you your principal and interest payment. They do not tell us points paid, points received, or APR. What happened on the rates yesterday? Conventional rates rose 6.513 on a 30-year fixed. 30-year jumbo loan, 6.912. That was up. FHA, 30-year fixed, 6.357. VA, 30-year fixed, 6.037. Clean sweep, USDA, that was the 30-year fixed. That was up to 6.329. If you want our thoughts about the market each and every morning, as early as the data allows, we put out a report, rsrmarketminute.com, rsrmarketminute.com. That gives you our thoughts about the market. Let's see what's going on already this morning in the markets. So we can take a look and see that the, if I can find it here, the S&P 500 is now up 62.42. 10-year Treasury down 4 basis points. That's the yield on that bond. 3.86 is the yield. Now the bond price of the mortgage-backed security bond, remember, price and yield always move opposite directions, just mathematics. The 30-year mortgage bond is now up 18 basis points, which means interest rates are down a little bit today from yesterday. All that information is available on that super secret website, google.com. What's not easily found is, why is this happening? Well, we got some good inflation numbers again this morning. This is the Producer Price Index. This is the Federal Reserve likes the personal consumption expenditure report. Well, that's what you and I are paying for things. The companies that we buy goods and services from, that the companies that supply our vendors or our stores, is the Producer Price Index. And that measures wholesale or producer inflation, rose 0.1% in July, cooler than the 0.2% expected. Year over year, producer inflation fell from an upwardly revised 2.7, it was 2.6, to 2.2. This figure was beneath estimates of 2.3, even with the upward revision. Core rate, which strips out food and energy, which people don't, for those that don't need any food or energy, came in at 0% last month, much cooler than the 0%, 2% expected. Year over year, core PPI fell from 3% to 2.4%.
Yippee!
That's good news right there. Much lower than the 2.7 expected. Goods, food, and energy prices all rose, and even still, we had some very benign readings due to services declining. Good sign, as the Fed said, that last year the decline in inflation was not sustainable because most of it was coming from goods prices deceleration, and services were still elevated. And we are now seeing services prices moving lower, which is what the Fed wants. Bottom line, producer inflation came in much lower than estimates, and the bond market is responding favorably. So let me explain this to you real quick. Just think about this concept, and those of you that know me know that I am a little bit oversized. Well, maybe I'm a lot oversized. So if I'm going throughout a year and I'm gaining 5 pounds every month, not a good deal. But if I get in doing some right things and I'm only gaining 3 pounds a month, does that mean I'm losing weight? Or does that mean I'm just doing better than I was at 5 pounds? That's what's happening with the Producer Price Index, is it's still going up, just not going up as much as it was going up. So we are heading in the right direction. I am still forecasting. This is my opinion, and you can hold me to it if you want. And one of the beauties of radio is Josh tracks all these things. If I'm right, we're going to share this with you in September. If I'm wrong, we just won't talk about it. So I'm forecasting that the Federal Reserve is going to drop rates by at least 0.5% at their September meeting. Just my opinion. We'll see what happens. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990.